India's estimated $25 billion beauty and personal care market is getting a makeover, and the stylists are new-age D2C brands who are online first, making buying off the shelf passé. With click and order, virtual try-ons, shade finder tools, beauty masterclasses, and much more. These conscious sellers are also scouring the forests for natural extracts and finding ways to make products cleaner. Not just that, they're also keen to personalize personal care via social media and through online communities. By 2025, 110 million Indians could be shopping online for beauty and personal care products, up 4 times from the current 25 million, turning the online personal care and beauty opportunity into a $4.4 billion market. And it's not just the consumers who are smitten by this direct-to-consumer revolution. Between 2014 and 2020, venture capital investors have pumped in $1.4 billion into D2C brands, of which 54% have gone into beauty and the fashion segments. Some of the world's largest FMCG brands figure among the investors, with many of them even acquiring these fast-growing startups. It's clear the opportunity is immense, but turning these disruptive brands into profitable businesses requires scale, volume, and in most cases an omni-channel approach. In fact, a D2C founder recently said that it has never been easier to launch a brand, it's never been more difficult to scale it either. And that brings me to the question that we're asking today. What does it take to build a disruptive D2C beauty and personal care brand in India? Hello and welcome to Young Turks, India's longest running show on startups and entrepreneurship. I'm Shireen Bhan. To discuss this further, we're joined by Pritesh Asher, the co-founder of Juicy Chemistry, Malini Adapureddy, the co-founder and CEO of Deconstruct Skincare, and Shantanu Deshpande, the founder and CEO of Bombay Shaving Company. Pritesh, Shantanu and Malini, many thanks for joining us here on this special edition of Young Turks. Pritesh, let me ask you, because Juicy Chemistry has been around for a few years now, so you were in that sense ahead of the curve, so to speak. What's the experience been like? What do you believe have become the enablers driving the D2C story today, specifically in the beauty and personal care space?
I think over the years, a lot of things have changed as far as, our startup journey has been concerned. When we started off, there was not much awareness, I would say, on the D2C segment. These words were not very commonly used back then. When we started off, obviously, as a D2C brand, things started becoming more cluttered, I would say, in the last 2 or 3 years. Like you rightly said, it's never been more difficult to scale, given the kind of competition that is there and almost lack of barrier to entry in this segment. Like you rightly mentioned, it's a $25 billion industry growing at about 9 to 10% CAGR for the next 5 years. It's a phenomenal piece of the pie that almost all Indian brands and international brands would love to have a piece of the pie as well. Having said that, our journey has been quite phenomenal in the last 2 or 3 years post our investment that we raised about 7.5 million last year, led by World Invest. We've grown strength to strength, gotten into newer markets, looked at expanding our product portfolio. The enablers for us have been being nimble, being able to get to market much faster, identifying the white spaces that are available for niche product requirements by the consumer. That has actually helped us, selectively target a cohort which is looking for those specific skin and beauty and hair care products, and that's really enabled us to grow strength to strength in the last 2 years.
I'll get to the challenges with respect to scaling up in just a second, but Juicy Chemistry has been around since 2014, so which is why I said that they were ahead of the curve, so to speak. And Malini is the new kid on the block. Deconstruct Skincare was launched about 1.5 years ago. So Malini, let me put that question to you. A, what made you want to get into this space? B, Pritesh said that it's easier today to sell. It's harder to scale up because this is also becoming now an increasingly competitive and hopefully not yet commoditized market, but perhaps on its way to becoming that. So what was the specific pain point that you wanted to address, and what's this 1.5 year journey for you been like?
Yeah, so I think for me, starting off Deconstruct has been a very personal journey. What I felt is, as a consumer, I have become more information seeking. I am actually making most of the decisions basis my Googling the information or checking it out from multiple sources. Whereas I felt the overall industry currently is at the scale, where they're actually selling to the aspirations of the consumer. So I felt there was no brand that was talking to someone like me. And that's, I think, is the starting point of, the entire brand deconstruct. Deconstruct actually means, can I deconstruct everything and put it right in front of the consumers to kind of make for the consumers to make an informed choice. And, exactly with that, our value proposition is information over impulse. Can you make decisions basis all the information that is provided by us? And that's basically the entire inspiration for me to start this brand. And of course, from a business perspective, I think India is still at a nascent stage with beauty and personal care. There's a lot more innovation. There's a lot more penetration to be explored in the market. From a wallet share perspective, India still spends much lesser than even similar per capita nations with respect to beauty and personal care. That means there's a lot of scope and there's a lot of scope for innovation as well as penetration into the market. And, this is basically the reason why I would say I thought this is the right brand to start in this specific market. And then coming to your second question, yes, it's never been probably easier, as you mentioned, to start a brand, but it's also very difficult to scale a brand. But when you are actually starting a brand, I think the most important thing is, do you understand the pulse of the consumer? Do you know what your consumer is wanting and can provide a solution so concentrated to their problem? I think that's the crux that needs to be cracked. It's not easy, but when you yourself is the consumer, I think it kind of puts you in a better place to crack that. In fact, our organization is made up of 70% women, which is basically represents our consumer base. And that's a very conscious choice we have made right from the start. Yes, scaling is difficult. As I said, for us, one word mantra is how well can you understand consumer, understand their pain points, and give a targeted solution for that.
Yeah. Absolutely. So how personal can personal care really be? That's the big question, and that is the opportunity that people like Malini and Pritesh are hoping to address. Shantanu, let me come to you now. You, of course, launched Bombay Shaving Company in 2016, so your experience is somewhere in the middle of Pritesh and Malini. But before I talk to you about the Bombay Shaving Company, let's get the elephant out of the way, or out of the room, Shantanu, so to speak. We didn't know that you would have become such an internet sensation when we called you to come on to Young Turks to talk about the beauty and personal care market. Let's address this issue. Your LinkedIn post has gone viral. It stirred up a massive debate online on your comments that, in the first few years of your work life, you need to focus and prioritize work. The 18-hour statement that you made has evoked a massive response. Shantanu, did you anticipate this reaction? What do you make of what you're seeing online?
I'm actually quite, I'm amazed to see, actually also realize that sometimes personal contexts can be narrow. A nuance is often lost when you post it on a LinkedIn, on a LinkedIn post, for example. So I recognize that it would have touched a nerve for people after reflecting on it. But at the time, it was actually a very casual. I'm a very casual and honest person. If you see the kind of stuff I put online, it is fairly candid. This one I think triggered a nerve for a lot of people who may have been in unfortunately toxic workplaces, bad bosses, politics in the organization. That putting an effort is not reaping the result. So the message, I think, was misplaced for a lot of people.
Yeah, and I would imagine that, as you pointed out, you probably didn't anticipate the way that this would have been received by a large majority of people who read that post. But Shantanu, on this aspect of toxic work culture and toxic work environment, and you, of course, have post that viral LinkedIn post, put out another one saying that, look, come talk to the people at Bombay Shaving Company to understand that that's not how we actually run things. But, on this whole business of work-life balance, I think today there is a conscious movement across organizations to say, look, globally now you're even saying log out of your emails, don't address work emails after working hours, weekends are off, and don't address work issues over the weekend, and so on and so forth. So this is not just a debate happening here, it's a global debate at this point in time, and I think the pandemic has only exacerbated this discussion and this debate. Now, as a leader today, how do you hope to address some of these issues? And some of these concerns are legitimate, some of these concerns are genuine.
No, I completely agree. I think there are two things, right? I think it's a global debate, but the Indian context is a little different. It's a little nuanced, number one. Number two, work-life balance at different stages of life is different. For someone who's maybe much older, the amount of responsibilities that the person has are very different. And my post was actually very specific for a 5-year window that people have when they first join a job to when they become 27, 28, when their responsibilities might start going up. Because I think we are, as a nation, we are on the precipice of, I think, something amazing at an enterprise, government, national level. And generally, working hard is a tenet of the Indian middle class. That's what our parents taught us. It's not like the message was off. But I think it depends on stage of life where you derive energy. When you have a lot of energy and enthusiasm, honing your craft, it could be any craft. You could be an athlete playing cricket for India. You could be a guitarist. You could be a business person. You could be an employee at a company, whatever. That if you can you can build the muscle for the first 5 years when you have max energy, you can then flex it for the next 30 years and your career graph becomes very different. So it's worked for me. I think I've seen it work for a lot of people. And, people like Sachin have said that, I used to bat 18 hours a day and so on. So I think the number 18 hours is more representative of doing it your own.
Yeah, this is a whole other debate, and we will probably get you back on and have this another time. But Shantanu, let's talk about the Bombay Shaving Company now, and I want to understand from you what the journey and the experience has been like. You've got big investors on board, from Reckitt to P&G. So take me through what the experience has been like for you so far, and more importantly, what's the kind of headroom for growth that you foresee from here on?
No, absolutely. I think one correction, Shireen, we have Reckitt and Colgate Palmolive, not Procter. Procter actually owns Gillette,
Colgate,
which is our biggest.
My mistake. My mistake.
No, Procter owns Gillette, which is we respect Gillette a lot and someone who we look up to. So Bombay Shaving Company started as a premium shaving brand. We have kind of evolved into a hair removal brand with a lot of adjacencies in beauty and skincare, but we are at the very core hair removal. Any unwanted hair on your body, whether you're a man or a woman, we want to give you a sensorial experience, a joyous experience to remove it, because we believe if you remove unwanted hair, for example, someone like me, I'm bald. I like to remove hair on my head. Pritesh looks like someone who clean shaves, so someone like him wants a clean shave. If Malini wants her eyebrows trimmed more often than not, I think we want a product for everyone, and we believe that the delta in personal perceived self-beauty is highest when you remove unwanted hair in a nice way. So that's where we have evolved. We are now roughly a 250 crore net brand per year, of which almost 20% comes from our women's business, which is a brand called Bombay, which we launched 1 year back. I believe both those businesses are very different. Hair removal for men and hair removal for women are very different businesses with different headrooms for growth. I think for men, it's a offline heavy grab and go category where we are taking on incredible incumbents. So we'll have to focus on innovation, well-priced products, and high quality of competitive experience, right? With women, I think for Bombay, we really need to focus on innovation, making sure that women's hair removal needs are very, very diverse across body parts. And right now the market is very, very underserved. Unlike men, where there are good trimmers and razors and shaving creams, but for women that doesn't exist, right? So there we need to be market leaders and market creators. And honestly, I think that's a different challenge. But again, the market there is almost 3 times as big as the one in men. So I think very different businesses, but headroom in both.
Pritesh, I want to come back to you now and talk about that, because you started by saying that starting up is easy Scaling up is the challenging part. And what we have started to see already in the D2C space is that standalone brands are now being picked up by the FMCG big boys, so to speak. So, specifically, what are the problems with scaling up that you're facing at this point in time? And is that eventually going to have to be the future for a lot of the D2C players being picked up by the incumbents, the legacy incumbents, so to speak?
So the predominant challenges that we face today as a D2C brand is obviously COVID really helped us give a lot of tailwinds to the efforts that we were putting on our online efforts. With things opening up as well, it's more focused towards our omni-channel growth now. People have gone back to shopping in their traditional ways, which is offline as well. 92% almost of all retail happens offline in India. Our penetration on online is yet very nascent. So one of the things that we are facing today is, whilst we don't have much trouble in getting orders from our repeat customers, one of the things that has definitely moved quite a bit in terms of the cost factor is acquiring the new consumer to induce trials, and therefore make sure that we have a good lifetime value out of this customer. So essentially what we are having to face is having to spill out a larger sum of the money to get this consumer to try our product for the first time. And I think that has been a case for the last one odd year now, where it's consistently on the rise because of many brands trying to come in on the online space and also wanting a space in the same advertising field as we are. So the consumer online has not grown so much, but the number of brands that are playing within this vertical has grown multifold in the last year or so. So obviously the demand and supply is disproportionate at this point, and hence having to shell out a lot more money. The other thing that we are facing today is offline touch points were not so much available for us because we focus too much on D2C. Today, people also want to touch and feel the products, want to understand, want to speak to a beauty advisor, get a personalized regime going for their skin and hair care regimes, and that's what we are looking to focus on right now. But again, offline is definitely a much more expensive model because there is a lot of capital expenditure involved over there as well.
Malini, let me address that question with you as well. As Pritesh said, the cost of acquiring customers has gone up significantly because it has become a very competitive market at this point in time. How much of a challenge is that for you? What do you do to de-risk yourself? I know every brand is sort of trying to work on a strategy of communicating specifically with different kinds of communities that you wish to address, and perhaps to start with, profit will be in the niches as well for some of the brands like yours. But what's the strategy there on the marketing side? And more importantly, what are the challenges on the manufacturing side? Because we haven't spoken about that at all.
Sure. Sheen, about the increasing customer acquisition cost, I think that's common across the table because your inventory had remained the same, but there are multiple brands in the market with a lot of capital who are competing, and hence, it is becoming extremely difficult. A lot of brands are competing for the same consumer. So I think what definitely becomes important is, that sharp communication, as you already pointed out, right? So how well do you know your consumer? How well do you know your target group? And how sharply do you talk to them? And how sharply do you address their concerns and provide a solution through your communication? I think that's absolutely important. And, as a founder, for me, a lot of my time kind of goes into that. And that is something we consciously want to do going forward as well, because unless and until we actually talk about the product benefits rightly to the target group, they would not even know of it. And so we have seen that by being that sharp, customer acquisition costs can be addressed. And point number 2 around the customer acquisition cost is everyone is actually doing digital marketing. But apart from digital marketing, how else can you get a brand recognition is also very important. The word of mouth. So the quality of your products become important. And so how are you making those products is also becomes very important. That's probably where I think the manufacturer comes in, but probably I'll just pick that up later. Just continuing on this bit around the word of mouth, and also multiple types of brand marketing is what I would call it. Like, how do you ensure that your brand is kind of made known to multiple people in the market through multiple means is absolutely important. Because as Pritesh was mentioning, right, you need to ensure that your brand kind of gets picked up by most people. And that only happens when you are there shouting out, saying that, hey, listen, I am here, looking out for a need for yours. So, that also can be done in multiple means. It could be probably done through influencers. I mean, that's a very tried and tested method, but you can pick up some sort of celebrities, or you can do it in multiple means. But the idea is, apart from the digital or the performance marketing, how else are you putting the brand out there and making sure that a lot of people are aware of it for them to even try out your brand? I think that's basically the crux of marketing comes into play, and that's we basically want to invest a lot of time there to reduce the customer acquisition cost. Coming to the manufacturing bit, yes. So we basically, as a brand, what we do is we try to do a lot of focus groups, a lot of consumer interactions before we actually bring out any product in the market. That also means that we take a lot of time to launch a SKU in the market. So we usually do anywhere between six to 18 months of cycle of R&D that gets into each and every product. So we kind of try to understand the consumer and then kind of go into R&D with a brief of what the expectation of the consumer is and what they're expecting from texture to the ingredients to the kind of usage. So everything kind of gets decided by understanding the consumer and not the other way around. I think manufacturing is a difficult thing, but more or less it is kind of getting extremely, I would say commonplace, and it's kind of becoming more accessible. What I think we basically have faced issues around is in case if you're utilizing any sort of unique ingredients, and how do we kind of import them into India? But that is also, commonly solved through our supply chain. So I think the crux of it is how well do you R&D your product rather than the manufacturing part of it.
Yeah, no, I get that. And I would imagine that procurement is a challenge that Pritesh is also faced with, especially when you are dealing with things like organic, skincare, etc. But Shantanu, I want to understand from you, since you're already, you've clocked this mega milestone of 250 crores. How has the playbook changed from being able to get to the 100 crore milestone and now being able to get to the 250 crore milestone? What were you doing then? What are you doing differently today? And, what can we now expect going forward?
So I think I agree with Pritesh. I think COVID was a fantastic tailwind creator for businesses like ours, while being tragic at a social outcome level. But I think a lot of things fell in place. Our competitors had struggles with supply chain, etc. So I think the one big shift that we have made is we have really tried to create velocity for our products offline, right? Create the right assortment, be price competitive. A lot of our categories, from shaving to women's hair removal to razors, kind of sit offline. Consumers buy these offline a lot more than online. From assortment to merchandising to relationship with trade and building an outstanding sales force. I think there is a lot of different muscle that you need to build from an offline standpoint to create velocity for your product, from identification of stores to activating stores, to making sure that your sales force is able to deliver, to making sure that your shopkeeper is able to show, and there's discovery, and then the consumer is kind of served the right product and the consumer is happy. Once the consumer is, hopefully the product kind of does its job from a repeat standpoint. So that's one big shift for us. Almost more than half our business today is offline. And I presume that when we get from 250 to 500, that number will be 70%. And when we get from 500 to 1,000, that number might be 80%. And that's just the nature of Indian retail. As you scale, you have to build out more offline, right? The second thing I think is we raised capital. I think capital was a significant, accelerant for us. We raised almost 210 crores in our Series C. There was abundant capital. We had clear product market fit. We had a large market and slow incumbents, right? So we kind of fit the bill. So we have kind of smartly used that capital at a brand marketing level. I agree with Malini. I think a lot of things are expensive at the performance level. Thankfully, we have almost curtailed our performance spends to less than 20% of what they were before. So we are spending a lot of money on content, which includes doing podcasts and working with influencers and getting consumers to like what the company stands for beyond just the product.
Well, Malini, Pritesh and Shantanu, we wish you the very best of luck, and I do hope that that you get through the volatile times and the turbulent times that we are currently faced with and emerge stronger at the end of it. Thanks very much for joining us here on Young Turks, and we wish you the very best of luck. That's it then on this special edition of Young Turks. We are going to take a break. There's a lot more coming up. Don't go anywhere. Back in a minute with more.